Hey guys, welcome back to the Value Investor Show. Today I'm ranking the most popular stocks of 2025. Are these stocks undervalued, overvalued, or fairly priced? Let's dive into it. So year to date, I'm up 24% versus 14% for the S&P 500. Now, many of my stocks haven't performed great over the past month, which has stagnated growth a bit, but I truly believe that many of the stocks I have recently invested in are yet to fulfill their potential. I'm investing for the longer term, and for example, Deckers, one of the stocks that I have been investing heavily in over the past few months, is still far from reaching its full potentials. If you're new here, subscribe. I take a lot of time and effort putting these videos together, so if you could subscribe, it would mean the world to me. And as I said in my previous videos, I will reveal my full portfolio at 10,000 subscribers. I'm just 45 subs away from 3,000, so let's get there together. All right, let's get right into it. Amazon, firstly, in my opinion, is currently between undervalued and fairly priced. I'm watching it very closely because I believe the potential for this company is enormous. At a 2.3 trillion valuation, I believe that Amazon is set to become the first 1 trillion company in revenue. With AWS as a major catalyst and its ad business booming, Amazon has both the moat and the potential to become a 5 trillion business. So for that reason, I'm adding it to the watching closely category. Now, Novo is currently down 60% over the last year, trading at a P ratio of 17. The company faces major headwinds, most notably due to their craze around their Wegovy weight loss drug, which is now facing enormous competition and growing regulatory concerns. With the lawsuits piling up, even though the numbers make sense, I'm still putting Novo in the watching closely category because there are many risks ahead for this business. Now, the third business is Nibius. For me, Nibius is a critical in the semiconductor and data center supply chain, and it's been performing exceptionally well with tripled stock gains. However, at this current price point, I think the company is fairly overvalued. A lot of the future growth is already priced in, so I'm placing it in the overvalued section because I believe that Nibius has a lot to prove, and at this price point, it needs to prove that it deserves this premium. Now, AMD, I think, is fairly valued. It's an amazing company with huge upcoming catalysts, which is why I'm placing it at the fairly valued section. I think with a PE of 137 and a market cap of 372 billion, AMD still has a lot to prove. Not to the same extent as Nibius, but the company's true growth potential is yet to materialize. So for now, I'm not adding any more to that position, but I am watching closely, and I believe that AMD is fairly valued. Now, the two companies that I want to talk about are Oscar Health and United Health. I think Oscar Health and United Health are undervalued. The industry has been severely damaged and underperformed the market over the last few months, but I think recently there has been some uptick in both those companies. I believe there is a lot to fix in the healthcare insurance industry, but for now, I'm putting both those companies in the watching closely category because yes, they are undervalued to some degree, but I don't believe they have enough margin of safety or more than 40% margin of safety right now. Nike, on the other hand, the CEO is doing great things and he really understands that sports are all about athletes. It's about having athletes represent your brand. That's exactly what other brands are doing, like On Running. They have successfully done it with Roger Federer. And at this current price, at $68, I believe that Nike is currently undervalued, especially when you remember that it was trading at $170 just 4 weeks ago. So I will place Nike between the undervalued and the watching closely categories because it really depends on the assumptions you make on their growth for the future. Tesla, on the other hand, is a company that I would never touch. I believe that Tesla is strongly overvalued at a PE ratio of 260 and a market cap of 1.4 trillion. The company is no longer growing. It's showing year-on-year declines in both revenue and profits. And while many people are betting on robotics as the next big catalyst, they forget that competition in robotics is fierce as well. So for me, Tesla is overvalued, strongly overvalued. Meta, on the other hand, is one of the best companies that I have ever invested in. My returns have been insane. I bought back in 2022 when everyone said TikTok was replacing Instagram, and even at $700, I think the company whenever you buy, you will not lose long term. So Meta for now is in my watching closely list. I usually wait for lower prices to buy more, but I think, you know, this is a win situation for this company. You can never go down. Similar to Meta, Alphabet is a fantastic business. I invested earlier this year and I'm already up 70% on Google, but with competition heating up in cloud and search from ChatGPT, Perplexity and others, I believe that Alphabet is fairly valued at this price point. Wise is another great business. It's listed on the London Stock Exchange, which means it's undervalued compared to similar payments companies listed in the US. In my opinion, there are a huge future catalyst, including a potential US listing. So I am putting Wise as a watching closely bucket, trading at a discount, but yet to see its full potential. Now, Apple, on the other hand, is a mature business that everyone knows, and I think at this price and market cap, I think that Apple is somewhere between fairly valued, if not overvalued, but I will put it as fairly valued. There's not much to say there. Now, this brand I love. I have been talking about it for months. I think it's one of my favorite stocks. They own Hoka and Arc, two incredible brands, and the business has been growing double digits year over year for the past decade. It has zero debt, 2 billion in cash, and trades at a 14 billion market cap with a P/E ratio of 15. The company is majorly undervalued in my opinion, and for those reasons I'm putting it as undervalued. Palantir, similar to Tesla, is a company that I wouldn't touch at this price. I used to be a shareholder, but I sold all my shares at a P/E ratio of 550 and a market cap of 400 billion. This is a no-go territory for me as a value investor. Palantir is strongly overvalued. ASML, on the other hand, is a solid, proven company and a monopoly player in the semiconductor industry. It owns the entire equipment chain used to make chips. Yes, it faces some competition from Chinese player in that local market, but I still believe that ASML, after its recent run-up and really good performance in stock, is now fairly valued. Duolingo, again, quite a controversial company at a 14 billion market cap and a PE of 130. I believe Duolingo is overvalued. I understand the bull case for this company, but the company is facing a lot more competition that people actually want to admit, and its current growth doesn't justify the valuation in my opinion. Adobe is another beast of a company, which in my opinion is a huge monopoly and strong pricing power. And yes, there is competition, but the switching costs in this industry are massive, and that's what gives Adobe its moat. At a PE ratio of 22, I believe that Adobe is undervalued and still has significant upside. PayPal has also a similar story. PayPal isn't growing as fast as Adobe, it's growing single digit, but many of the risks are now mitigated under the new leadership, and trading at a PE ratio of 15. PayPal is undervalued and continued to return significant value to shareholders through buybacks, just like Adobe. Hims, on the other hand, is another controversial company. In my opinion, even though it's down recently quite significantly, I still believe that Hims is overvalued. The fair value, in my opinion, is around $20 to $30, which is currently trading at $50. On Running, again, is a fantastic company, and at $41, I wouldn't say it's massively undervalued, but it's definitely a growth story with very strong fundamentals. So for that reason, I'm watching closely, and I will likely add more in the future. Now, the last two companies, Nvidia is really a true beast of a company. I have never seen a company grow at this scale with such numbers. Without Nvidia, there is no AI, period. And I think it's the strongest company in the world. And at this stage, I think it's fairly valued given its dominance in the field. And finally, LVMH is a company that I have been speaking about for months, and I'm a proud shareholder, up 40% so far. And at this price point, I had say it's fairly valued. There are very few leadership issues to sort out, but overall they're doing really well, and I can't wait to see what unfolds next with this incredible company. So for now, I'm putting it as fairly valued. As always, thank you so much for watching. I hope you enjoyed this different kind of video, and if you're still watching, please subscribe. It only takes a second and it means the world given the hours I put into making these videos for you guys. I'll see you in the next one.